Have you ever felt like you're playing financial whack-a-mole? You work hard, you save, you even skip that daily latte, but your bank account balance just isn't growing as fast as it should? You're not alone. Last year, the average American lost a staggering $632 to fees and forgotten expenses they never even noticed. Think about that for a second. 632 bucks, not a typo. It just vanished, quiet as a slow leak under the sink, dripping away your hard-earned cash without a sound. It's like someone siphoning off your money while you're asleep. Today, we're going on a hunt for those invisible holes in your financial budget, starting with the ones that have probably already cost you free money this month. We're not just plugging leaks, we're sealing them shut for good. The free money firehouse. Let's talk about the easiest money you could ever make. If your boss walked up to you today and offered a 3% raise, you jump right in, right? You'd be thrilled. Yet, here's the kicker. Nearly 40% of workers in America are leaving employer 401k matches completely untouched. They're literally leaving free money on the table. This isn't some complicated investment strategy. It's a legal clause in your employment contract that essentially says, for every dollar you save towards retirement, we'll drop another one into your bucket, up to a certain percentage. It's a 100% return on your investment immediately. Missing out on that is like pouring water straight onto the grass instead of into your savings account. You wouldn't throw away a bonus check, so why are you turning down a guaranteed one? This isn't just a small oversight, it's a monumental missed opportunity for your future self. Over decades, that consistent employer match, compounded year after year, can literally mean the difference between a comfortable retirement and one filled with financial anxiety. So, do yourself a massive favor. Log into your HR portal right now. Seriously, do it today. Bump your contribution up to at least the level of the employer match, and then just forget about it. No budget cuts required, no painful sacrifices, just free cash you were unknowingly gifting back to payroll. It's the simplest, most impactful financial decision you can make, and it's waiting for you right now. The vampire bill. Subscriptions. The silent killers of our bank accounts. They've exploded, growing a mind-boggling 800% since 2012, and the average adult now juggles a dozen of them. Think about that. 12 different services, all taking a little bite out of your budget every month. One of mine was a $7 meditation app I hadn't opened since, well, let's just say it was before the final season of Game of Thrones. $7 times 12 months? That's $84 a year for silence I wasn't even enjoying. It's the ultimate vampire bill, and it drains your money while you're completely unaware. We sign up for these things with good intentions, use them for a bit, and then they just linger. They become background noise, small enough to ignore, but collectively they're a significant drain. So, here's your audit night challenge. Open your banking app, scroll through your transactions, search for every recurring charge under, say, $15 or $20. And here's the rule. If you can't remember actively using that service yesterday, or at least in the last week, cancel. Don't hesitate, don't rationalize, just cancel. This isn't about deprivation, it's about intentional spending. It takes maybe 12 minutes, but that simple act can save you hundreds, if not thousands, over the course of a year. Imagine what you could do with that extra cash. The sneaky bank fee. Let's talk about banks, specifically those sneaky fees that seem to pop up out of nowhere. Overdraft fees, for instance, hit an average of $33 a pop. But here's the truly insidious part. Many banks deliberately reorder your transactions from largest to smallest. Why? To trigger more overdrafts. You might make a small purchase, then a large one, and another small one. If they process the largest one first, even if you had enough money for the small ones, suddenly you're overdrawn multiple times. It's a profit center, plain and simple. And what about overdraft protection? It sounds helpful, right? Like a safety net. But in reality, this protection is often the predator here, allowing these fees to accumulate even faster. My advice, opt out of overdraft protection completely. Yes, you heard that right, opt out. If you don't have the money, your card will simply be declined, which is far less embarrassing and much cheaper than a $33 fee. Even better, consider moving your primary checking account to an online bank. Many offer no minimum balances, no maintenance fees, and often reimburse ATM fees. One switch saves the average household $250 a year, and that's before we even count the ATM rebates or the peace of mind of not having to constantly monitor for predatory fees. It's time to stop paying your bank for the privilege of holding your money. The credit card quicksand. Credit cards. They offer convenience, rewards, and the illusion of painless spending. But for many, they're financial quicksand. Carrying a $3,000 balance at 19% APR isn't just a number. It bleeds $47 in interest every single month. $47 just gone. You wouldn't light that cash on fire, would you? You wouldn't just tear up a $50 bill. Yet plastic makes it feel painless and visible. That's the trap. The good news, you can escape this quicksand. Here's the plug. List all your credit card balances from smallest to largest. This is the debt snowball method, and it's incredibly powerful, not just financially, but psychologically. Attack the smallest balance first with every penny you can scrape together while only paying the minimums on the rest. When that smallest balance hits zero, you'll feel an incredible surge of momentum. Take the money you were paying on that first card and add it to the payment for the next smallest balance. Rinse and repeat. To accelerate this, automate an extra $100 a week or whatever you can afford directly towards that target card. You'll be absolutely amazed how fast the leak dries up when those balances hit zero, freeing up hundreds of dollars a month that were previously just fueling the credit card company's profits. The warranty wink. Ever been at the checkout counter just about to finalize your purchase when the cashier leans in and pitches, and for just $29.99, you can get 2 years of peace of mind with our extended warranty. Retailers absolutely love selling these, and for good reason. They mark up extended warranties by a staggering 400%. That's pure profit for them. Consumer Reports data consistently shows that most products simply don't break within the covered warranty window. And if they do, the manufacturer's original warranty often covers it, or the repair cost is less than the extended warranty itself. It's a classic upsell, preying on our fear of something going wrong. Next time that pitch comes, smile, politely say no, and instead, bank that $29.99 yourself. Create a dedicated high-yield savings bucket, label it self-warranty, and deposit that cash there. Do this for every product you buy. Odds are, you'll keep every dime, earn interest on top of it, and if something does break, you'll have your own personal fund to cover it. You're essentially becoming your own insurance provider, keeping all that profit for yourself. It's a simple shift in mindset that keeps hundreds of dollars in your pocket annually. The lazy investment trap. Investing feels complicated, doesn't it? But sometimes it's the hidden costs that really bite. Let's talk about expense ratios. A seemingly small 1% expense ratio on a $10,000 index fund might sound negligible, but that 1% costs you $100 every year, whether the market goes up, down, or sideways. It's a guaranteed loss year in and year out. And it's not just $100, it's $100 that could have been invested in compounding for decades. Over 30 years, that seemingly insignificant 1% can siphon away thousands, even tens of thousands from your retirement nest egg. The solution is remarkably simple. Swap to a zero-fee or ultra-low-cost index fund that tracks the exact same benchmark. Many reputable brokerages now offer these. You keep that $100 and every future $100 compounded for decades. This isn't about taking on extra risk or chasing higher gains. It's about eliminating unnecessary leakage. It's about ensuring that more of your money is working for you, not for the fund managers. It's a set it and forget it optimization that pays massive dividends in the long run. The food waste drain. This one might hit close to home for many of us. The EPA estimates that the average American family tosses $1,500 worth of groceries into the trash annually. $1,500. That's a significant chunk of change, not to mention the environmental impact. How does this happen? Impulse buys, forgotten leftovers, produce wilting in the back of the fridge. It's a major leak, but it's also one of the most satisfying to plug. Start by shopping your pantry first. Before you even make a grocery list, open your fridge and pantry and build meals around what you already have. Get creative. Next, freeze anything perishable within 3 days of spoiling. Those bananas can become smoothies. That chicken can be a stir fry later. And here's the simple trick. Keep an Eat Me First bin or shelf in your fridge. Put all the items that need to be consumed soon right there, front and center. 1 month of conscious waste cutting trimmed my own grocery bill by 18%. No coupon clipping needed, no extreme diets, just smarter management. It's about respect for your food, your money, and your planet. If any of these leaks just made you mutter, "Yup, that's me," or if you're already mentally running to check your bank account, please smash that like button. It tells YouTube to show this video to the next person who desperately needs their financial bucket sealed. And drop the phrase "plug the leak" in the comments below so I know you're committed to taking action. The phantom interest. Are you still earning 0.01% interest on your savings account? Many big banks still hand out these laughably low rates. Meanwhile, high-yield savings accounts now pay 4 to 5% or even more. Let's do the math. $10,000 sitting in a traditional bank account earns you a measly $1 a year. $1. That same 10 grand transferred to a high-yield savings account could earn you $400 or more annually. That's a $399 difference just for clicking transfer. It takes 10 minutes, maybe 15 if you're setting up a new account. And that extra $399, that's yours every single year for the rest of your life, compounding. It's money you earn for doing absolutely nothing, simply by moving your cash from a dead account to one that actually works for you. Don't let your hard-earned money gather dust. Make it earn its keep. The overpriced utility. Here's a secret many people don't know. Most states allow you to choose your electricity supplier. Seriously, a quick rate comparison cut my bill from 14 cents per kilowatt hour down to 9 cents. That's a $28 saving every single month, or $336 a year for the exact same electrons powering my home. It's like getting a discount on the air you breathe. All you have to do is Google energy choice plus your state and you'll find the options. And while you're in plug mode, apply that same proactive approach to your internet bill, your car insurance, and your cell phone plan. Call your providers, ask for a better rate, mention competitor offers, or inquire about loyalty discounts. These companies rarely offer their best deals up front. You almost always have to ask. I've personally saved hundreds by simply making a few phone calls. It's not about being aggressive, it's about being informed and assertive. You deserve the best rate for the services you use every day. Your financial bucket isn't broken. It's just full of holes you didn't even see. But now you do. You've got the map to the leaks, and now you know exactly how to patch them. So here's your action plan. Patch the 401k match, cancel those vampire subscriptions, ditch the sneaky bank fees, crush that credit card quicksand, refuse the extended warranty, swap out that lazy investment fund, eat your food instead of wasting it, move your cash into a high-yield account, and negotiate your utility bills. Do 3 of these things a week, and you'll stop thousands from slipping away. Money that stays in your account starts working for you instead of evaporating into somebody else's profit margin. Plug the leaks, fill the bucket, and watch your savings finally rise. Your financial future isn't about grand gestures. It's about consistently sealing the small, unnoticed drips. It's time to take control.